What if we told you one man's tariff war just torched the American dream? In a single move, President Donald Trump slapped massive tariffs on Canada, thinking he would strike a blow for American jobs. Instead, he struck the heart of America's housing market. Timber stocks collapsed. The cost of building a home skyrocketed by almost $10,000 overnight. Home sales plunged to levels not seen since the last housing crash. This wasn't China. This wasn't OPEC. This was America sabotaging itself. Now, Canada's lumber industry is thriving on global demand. While U.S. homebuyers are priced out, builders are canceling projects, and the housing market faces its sharpest slowdown in over a decade. But how did Trump's America First tariffs backfire this badly? Why is the U.S. timber industry bleeding cash while Canadian suppliers find new opportunities? And could this be the economic blunder that reshapes America's housing market for years to come? In this video, let's find out. When President Trump announced tariffs on Canadian lumber, the move was promoted as a patriotic step to protect American industry and level the playing field. The idea sounded straightforward. Prevent subsidized Canadian timber from flooding U.S. markets and give American producers a chance to thrive. But the lumber industry is anything but straightforward. Canada is not just one of many suppliers. It provides roughly 1/3 of all softwood lumber used in American home construction. From the 2x4s that frame suburban houses to the plywood used in commercial developments, Canadian timber is deeply embedded in the American building ecosystem. Any disruption to that supply immediately reverberates across the entire housing market. Therefore, the imposition of a 25% tariff, with the looming threat of it rising to 40%, sent shockwaves through the supply chain almost overnight. Builders, wholesalers, and retailers who had depended for decades on Canada's reliable and affordable timber suddenly found themselves facing uncertainty and risk. Prices didn't rise because of an increase in demand. They rose because supply was being throttled, and panic buying took over. Lumber futures jumped by 13% in a single week, as dealers rushed to stockpile materials before prices escalated further. Ironically, the very companies the tariffs were supposed to help soon felt the squeeze. Take Weyerhaeuser, one of the largest timber producers in the U.S., managing over 10 million acres of American timberland. The expectation was that reduced Canadian competition would mean higher profits for domestic firms like Weyerhaeuser. Instead, the opposite happened. Shortly after the tariffs took effect, Weyerhaeuser reported a shocking 50% plunge in quarterly profits. Why? Because when lumber prices spiked, home builders didn't accelerate purchases. They pulled back. Projects were delayed or canceled altogether. Orders to mills dropped sharply, and overall demand collapsed. A policy meant to encourage growth instead triggered contraction, exposing how interconnected and fragile the supply chain really was. This disruption spilled rapidly into the housing sector, where its effects were felt most sharply by builders and homebuyers. That's because tariffs don't end at sawmills. They travel all the way down to construction sites and, eventually, to the front doors of would-be homeowners. According to the National Association of Home Builders, Trump's tariffs alone added between $7,500 and $10,000 to the cost of building a single home. Of that, roughly $4,900 came directly from inflated lumber costs. Builders now faced a cruel dilemma: raise home prices and risk losing buyers, cut home sizes and quality to keep prices down, or halt projects entirely to avoid losses. Many opted for the third choice, freezing construction until costs stabilized. The impact was immediate and severe. New home sales fell by 10% month on month, and the inventory of unsold homes swelled to levels not seen since the 2007 housing crash. The NAHB delivered a blunt warning: every $1,000 increase in a home's price pushes more than 100,000 potential buyers out of the market. That means the tariffs didn't just affect a few businesses. They effectively locked entire communities out of home ownership, weakened demand across the real estate sector, and sent shockwaves into adjacent industries, including mortgage lending, local tax revenues, and construction jobs. What was intended to be a protective economic shield for American workers instead destabilized one of the economy's most critical sectors. Rather than safeguarding jobs, the policy threatened thousands of them, leaving both the timber industry and the housing market struggling under the weight of its own protectionism. Before we continue further, tell us, are you enjoying the video? If yes, please like and share the video and subscribe to our channel to watch more videos on the latest news stories on geopolitics, economics, and current affairs impacting your lives. The deeper irony of this policy was how it misunderstood the realities of U.S. timber production. The America First plan assumed domestic sawmills could instantly fill the gap left by reduced Canadian imports. But building modern sawmills takes at least 3 years, and even then, many rural areas lack the skilled workforce to operate them. Trump's executive order to fast-track domestic logging permits may have sounded effective politically, but it did nothing to fix structural bottlenecks in labor and production capacity. Meanwhile, Canada adapted quickly, shifting its exports toward Asia and Europe, where markets welcomed its supply, reducing dependence on U.S. buyers. This left American lumber dealers scrambling to fill orders while paying inflated prices. And companies like Weyerhaeuser, supposedly the beneficiaries of protectionist tariffs, were instead fighting to survive shrinking demand and rising costs. The outcome was a self-inflicted economic wound. Home building slowed dramatically, timber profits fell, and housing affordability worsened for millions of Americans. Rather than strengthening America's supply chain, the tariffs exposed its vulnerabilities and demonstrated how dependent the U.S. is on global trade. In trying to insulate an industry through tariffs, the administration had instead triggered a chain reaction that disrupted one of the nation's most vital economic engines and directly hurt the people it claimed to protect. Mortgage rates have remained stubbornly above 6%, and when combined with lumber costs inflated by tariffs, the price of building a new home has surged beyond the reach of many first-time buyers. Families that once dreamed of constructing a starter home have been forced to abandon or postpone those plans, often settling for older, smaller properties that don't meet their needs. Even renovations, usually a preferred option during housing slumps, are declining because materials like drywall, gypsum, and appliances, many of which are imported from Canada and Mexico, are now more expensive due to the same tariffs. What was once a manageable path to improving living standards has turned into an economic obstacle course, limiting options for both new builds and home upgrades. This affordability squeeze has created a strange paradox in the housing market. With fewer new homes being built, the overall housing supply has tightened, keeping prices elevated even as demand weakens. Real estate economists warn that this ripple effect is spreading into the existing home market, where buyers are now competing for a limited number of livable properties, further driving up prices despite higher borrowing costs. Remodeling contractors are seeing projects canceled or postponed as families scale back ambitions in the face of runaway costs. Buyers who had hoped for modern homes that matched their families' needs are settling for outdated, undersized houses simply because the cost of new construction has become prohibitive. However, while American families struggle with these challenges, Canada's response has been strategic rather than reactionary. Prime Minister Mark Carney has refused to accept a bad deal simply to ease tensions with Washington, and instead introduced an unexpected bargaining chip, Canada's trillion-dollar pension funds. These funds are heavily invested in U.S. infrastructure, energy, and development projects, giving Canada economic leverage that few anticipated. Trump's administration has been eager to attract foreign capital to finance domestic infrastructure, but Canada is now signaling that its massive investments could be tied to tariff relief, a direct challenge to Washington's negotiating position. This shift reframes Canada from being a passive trade partner, seeking exemptions, to an active investor with substantial influence over U.S. economic growth. The corporate world is also showing signs of strain. Timber giant Weyerhaeuser, one of the very companies Trump's tariffs were intended to protect, reported a staggering 50% drop in quarterly profits and warned of an additional $60 million loss in the next quarter if the tariffs rise to 40%. Analysts expressed alarm, warning of long-term margin erosion as the company struggles with reduced Canadian imports, escalating input costs, and weakening demand from homebuilders. Even a small uptick in Weyerhaeuser's share price following the earnings announcement reflected short-term speculation rather than genuine confidence in the company's future. The irony is clear. Policies designed to strengthen domestic timber production have instead destabilized it, leaving key players bracing for financial turbulence rather than growth. Trump has repeatedly pointed to lower mortgage rates as a victory for homebuyers, but those lower financing costs have been dwarfed by the surge in building costs caused by tariffs. The result is a market where signed contracts for existing homes have fallen to record lows, and new home sales have plunged as builders hesitate to start projects in such an unpredictable environment. What emerges is a policy that appears to have hit the wrong target entirely. Instead of protecting U.S. jobs and industries, the tariffs have fueled a housing affordability crisis, cut profits for companies like Weyerhaeuser, and placed additional pressure on American families already struggling with high borrowing costs. Meanwhile, Canada's economy has remained resilient, and its political leverage has grown stronger. The outcome is a self-inflicted slowdown in one of America's key economic sectors, raising an unavoidable question. Will Trump continue doubling down on a strategy that risks worsening the housing crisis? Or will he reverse course before this gamble triggers even deeper economic consequences? What do you think? Did Trump just sabotage his own housing market to win a trade war? Would you pay $10,000 more for your dream home just because of tariffs? In the comment section below, share your thoughts on whether this housing slowdown will spark another 2008-style real estate crisis. Do you want to watch more videos like this one? If yes, subscribe to our channel and press the bell icon next to it. We bring the latest news stories on geopolitics, economics, changing world order, and current affairs, things you need to stay informed. Thanks for watching, and until the next video, stay tuned.